Good morning, everyone. I hope that you are doing well. Welcome to today's new weekend review of the 9th of March 2025. I hope that you had a nice weekend so far and that you are excited for the upcoming week. In my opinion, the economic calendar for next week is looking rather interesting, but we'll get to that in a bit. Before we dive into today's weekend review, I just want to share with you that the daylight saving time shift has taken place, and therefore what you can see is that the times have shifted, and be mindful of that until your area also shifts the daylight saving times, because else what will happen is that you will get very confused when it comes to seeing the moves take place an hour earlier than what you're used to, especially if you're in Europe, of course. Therefore, what I suggest you to do is I suggest you to have a separate clock which runs based upon New York time so that you can simply follow that clock. Next to that, before diving into today's review, I would like to bring up that yesterday on the mentorship forum, we've announced that the SMT detector had become available to claim by mentorship students. However, after just a short while, we realized that certain students were not able to log into the exclusive pricing page which we had created. Therefore, we are looking into resolving this issue, and next to that I would like to share that we will also be changing the pricing structure which we had initially created for the SMT detector. We've made this change as a result of feedback by our students, and we are really grateful for the feedback which has been provided. So with that being said, more information on that will be announced soon, so you can keep an eye out on the mentorship forum, and hopefully we can get everyone access to the indicator in advance of next week's trading week. But with that being said, let us begin with today's review. When we then pay attention to the economic calendar for the upcoming week, what we can see is that on Monday we have a no news Monday. Last week we saw a very large range get established, and we saw higher time frame objectives getting reached, so therefore I anticipate that we're likely going to see a small range get delivered on Monday. Is it possible that we're still going to see nice opportunities present themselves after the 9:30 open or in close proximity to it? Yes, absolutely. So therefore, even though it's a no news Monday, this day can still be looked at. The focus will be on both the morning as the afternoon session. On Tuesday, what you can see is that at 10 a.m. we have JOLTS job openings, and as outlined prior, the JOLTS job openings are usually a pretty volatile event. Next to that, what you can see is that on Tuesday, it's the day in advance of CPI on Wednesday. So as the general protocol which I outlined to you in 2024 outlined, the day in advance of CPI is no trading day. But whenever there's a high impact news driver such as the JOLT job openings, we can still look at that day because we can still anticipate that there's likely going to be a clean price run. My focus will be on the following. I will be monitoring whether or not we are going to see 9:30 a.m. manipulates. If 9:30 a.m. manipulates, then we can anticipate 10 o'clock news to distribute. If we are not going to see any manipulation at 9:30 a.m. and we're instead going to see the market consolidate, what I will then be monitoring is whether or not the 10 o'clock news will get utilized for manipulation so that we can monitor distributions that take place afterwards. All in all, my focus on Tuesday will be on both the morning as the afternoon session. On Wednesday, you can see that we have 4:45 a.m. medium impact news for Euro. And at 8:30 a.m. we have the CPI release. Now, when it comes to CPI release, what a lot of people do is they try and gamble the outcome of CPI. This is something that a lot of gamblers do when it comes to news releases such as NFP, CPI, and FOMC. I'm out here warning you right now already, don't trade in advance of CPI. You do not want to find out what will happen when you do trade in CPI. And that is something which I keep on warning you every single month. And I know that for the students of my mentorship that have been here for a while, it's probably getting repetitive, but I need to continue sharing these warnings. My focus will be on Wednesday after 9:30 a.m. Meaning between 8:30 and 9:30 a.m. a lot of traders will be in a rush to do something. However, usually the real move takes place after 9:30 a.m. Meaning what I will monitor is whether or not 8:30 a.m. will get utilized for manipulation purposes so that after 9:30 distribution can take place. My focus will be on both the morning as the afternoon session. On Thursday, what we can see is that at 8:30 a.m. with the PPI release and the unemployment claims, what I will be monitoring for Thursday is whether or not 8:30 a.m. will manipulate so that distribution can be anticipated after 9:30 a.m. Again, for Thursday, my focus will also be on both the morning as the afternoon session. And on Friday, what we can see is that we have high impact news for the GBP at 3 a.m. And next set, what you can see is that there's high impact news for the DOR at 10 a.m. Whenever there's only high impact news at 10 a.m., my focus is on whether or not 9:30 is going to manipulate, because if 9:30 manipulates, we can anticipate distributions to take place after 10 a.m. If 9:30 does not manipulate, we can anticipate that 10 o'clock is likely going to manipulate and the distribution will fall afterwards. So with that being said, let us dive into the charts. When we pay attention to the daily chart of Nasdaq, what you can see is that Nasdaq has repriced the past week towards the 20,000 price level right here and the October low. Notice that the October low formed right in advance of this 20,000 price level. What I outlined throughout the past week was the following. What I outlined was that I was monitoring the reaction to this daily CB right here. As long as Nasdaq would not displace above this daily CB, I was leaning towards the downside. And the reason why this daily CB was so important was due to the fact that we displaced through the 21,000 price level. Notice that we opened up for the week, initially ran higher, and then began distributing towards the downside. Notice that we saw the market take out sell-side liquidity resting below the November low right here, and we saw the market then retrace. In what did the market retrace? We saw a retracement taking place into this red shaded box right here. This red shaded box is a price range which I established based upon the RE chart. Notice that we saw the market retrace into that range and we spent some time there. Notice that the market was referring to the January low as well, and eventually we saw the market expand towards the 20,000 price level and the October low. Why? Because what I want you to understand is that the fact that we stopped right in advance of it on Tuesday is the engineering of sell-side liquidity which is taking place. What a lot of retail-minded traders will try and do in a week that begins off bearish is that they will try and capture a bottom. We, however, know that IBDA will not stop with repricing lower until it has reached our draw on liquidity. What was our draw on liquidity? Our draw on liquidity was the October low and, more importantly, the 20,000 price level. Now that this draw on liquidity has been reached, what we must monitor is the reaction to these levels. Are we going to see the signs of a low formation taking place? Okay, if that would occur, then we would be monitoring whether or not a buy program would unfold. If we are, however, going to see the market just slam through this 20,000 price level for the upcoming week, and we're going to see it continuously reprice lower, well, then to me, the only logical draw on liquidity then becomes this imbalance right here. Because when you pay attention to this imbalance, you can see that this imbalance formed in that next range from 20,000 to 90,000. And where exactly did it displace through? Through 19,500. So if we are going to see further sell-side continuation, then I anticipate that we're likely going to draw towards the sell-side liquidity resting below this low, because notice that these lows are relatively equal. Now, when draws on liquidity get met, you want to be cautious with holding on to one-sided ideas, and I'm going to wait for the weekly open before I can say, all right, this is likely going to be the next delivery profile which is going to take place. But when it comes to even that, you must understand that Monday sets the stage for Tuesday. Tuesday sets the stage for Wednesday. Wednesday sets the stage for Thursday, and Thursday sets the stage for Friday. Based upon how the beginning few days of the week are delivering, you can anticipate how the remainder of the week is going to deliver. Because we have CPI in the middle of the week on Wednesday, you're likely going to see the most clean price action taking place after the CPI release has taken place on Wednesday. When we pay attention to the RE chart then, what you can see is that on the Sunday open, we initially dropped lower trading into this REBC. We then saw the market reprice higher, trading above the 21,000 price level. But then throughout the morning session, the market began repricing towards the downside. Notice that the market was drawn towards sell-side liquidity resting below this low. This low was the previous week's low. Notice that when we repriced through that low, we saw this sequence of imbalances form. Notice that we saw the market retrace into that sequence of imbalances, and we then saw the market expand lower. This is what I outlined to you on Tuesday to be my anticipation. Notice, however, that we stopped right in advance of that sell-side liquidity pool of the previous quarter low, which was the October low. This was outlined in real time on the mentorship form that I was monitoring the reaction to the 20,100 price level. Notice that the daily low of Tuesday formed around that 20,100 price level, and we then saw the market expand towards the upside, trading deeper into this sequence of imbalances. Notice that the market was trading inside the sequence of imbalances multiple times. On Wednesday, we expanded lower from it. Notice, however, that no continuation took place, and we then saw a PM reversal taking place, and the market was trading back into the price range of this sequence of our imbalances. On Thursday, however, we saw the market open up and immediately began repricing towards the downside. If you watch my reviews of the past week, you will see that I outlined this full delivery which has taken place on Nasdaq. Day in, day out. And that is the level of precision which you're seeing within my mentorship reviews week in, week out. Now, what you can see right here is that I've drawn this line. What this line represents is a cracker correlation between Nasdaq and ES. I want you to keep in mind that Nasdaq created a higher high right here inside of the price range of this sequence of imbalances. When we pay attention to ES then, what you can see is that ES created a lower high right here. And therefore that's SMT. So as long as that SMT lasted, I was still leaning lower for the indices. When we pay attention to Nasdaq, what I want you to see is that we consolidated around what? We consolidated around 20,500. And what is that? That's EQ of that bigger dealing range that price was in. And therefore, what you can see is that around equilibrium, you can anticipate that consolidations take place. Now, with that being said, my analysis for Nasdaq is pretty clear. When you're looking at this right now, you might think to yourself, oh, it seems like we're forming a bullish break, or it seems like we're now going to expand higher. Nothing is confirmed yet, and therefore I'm simply waiting for more market data going into the upcoming week. When we pay attention to ES then on the daily chart, what I want you to see is that ES has also expanded towards the downside. Notice that this new week opened up, and notice that the market immediately ran higher into the 6,000 price level, which was the most important price level which we're monitoring for a long time. Notice that the high of week formed exactly at this price level. ES went just slightly above it, but eventually we saw the market form the high of week here and then reprice heavily towards the downside. What was the market drawn towards? The market was drawn towards Southside Gravity resting below the January low and below the October low. Now the reason why I'm putting emphasis on the January low is due to the fact that ES did not take out that low the week prior. Meaning Nasdaq was already trading below that low, whilst ES wasn't yet. So what I outlined was that in order for both Nasdaq and ES to move in tandem with each other, they both had to take out the January low. So then when ES took out the January low, my eye was immediately drawn to further repricing lower to take place. What you can see is that we took out the January low and we also took out the October low, which was that previous quarter low. Notice that the market reaches the 5,750 price level and we saw the market then retrace. What did it retrace into? The market retraced into this old imbalance. Notice that this imbalance had to function as resistance on price in order for the order flow to remain bearish. Eventually, we saw the market expand towards the downside and we saw the market create a new weekly low and we saw the market reach this daily BC right here. Now, when it comes to this daily BC being reached, what we'll be monitoring is the reaction to this range right here. If we are going to see ES begin displacing towards the upside and it would begin displacing above those previous monthly lows which I have annotated of the October low, January low, but also this imbalance, from that moment in time we could anticipate higher prices to come in play. But for now, I'm still leaning towards the downside and I'm waiting for how we're going to open up the upcoming week to see whether or not we're in fact going to see that sell program continue. If we are going to see the sell program continue, what we could be targeting is the following. What we could be targeting is this imbalance right here, which is below the imbalance which I have annotated. All in all, this is looking like a very interesting market environment, and the past 2 weeks you could have easily seen these shorts taking place. I know that for the majority of you, it's hard to understand what I mean with easily seeing these shorts coming, so let me explain. When it comes to the weekly profiles which have been in play the past 2 weeks, what you can see is that the past 2 weeks we have literally seen the same weekly profile, where we open up for the week, run higher, and immediately begin repricing towards the downside for the remainder of the week. This was this week, and now pay attention to the previous week. Where's the previous weekly open? The previous weekly open was right here. And what you notice is that we open up for that week, run higher, and immediately begin distributing towards the downside. So whenever we're in a trending market, this is the type of weekly profile which you can see coming, where we open up for the week and immediately begin displacing towards the downside. Notice that now that our objectives have been reached, we need to be cautious when it comes to holding onto one-sided ideas moving forward. When we pay attention to the daily chart of the dollar then, what you can see is that the dollar has been repriced heavily towards the downside the past week. This was a result of a lot of global tension being in play and the central banks running with that. This was a scenario which I warned you for these past few months when it comes to the environment in which we have been ever since Trump entered office. And what you can see is that a lot of chaos is present in the world. And as a result of that, you're seeing major volatility injections taking place across the board. Notice that the dollar expanded towards the downside within 1 week, what it took literally multiple weeks to reprice to on the left side of the curve right here. Now that the dollar has expanded towards the downside so heavily and it has expanded below both the February low as the December low, we saw the market reprice into this daily BC. What it will be monitoring is whether or not the dollar is going to find support inside this daily BC. If that occurs, we might see a retracement taking place into the December low right here. Notice that we displaced through that low with this CB. If that occurs, that might be a potential buying opportunity for the short term. However, I would be very cautious with holding on to a bullish idea for the dollar, because whenever a market is so violent like it is right here, you do not want to try and capture a bottom. Meaning, if we're going to see a retracement taking place, the reaction to the December low will be very telling moving forward. If the dollar would expand towards the downside from the new weekly open, then to me, the sell side liquidity resting below the November low would be my first strong liquidity. If the dollar would expand below the November low, utilize that as resistance on price, then to me, the sell side liquidity resting below this low comes to mind as a potential draw on liquidity. Now, what you can see right here is that when we open up, the dollar immediately expanded towards the downside. Notice that the weekly open is exactly also the high of the week. When we pay attention to the RE chart then, what you can see is that this week was a perfect trending week, where the market expanded towards the downside and it displaced below this REBC right here. This REBC got displaced from Monday, and we saw the market retrace into, and notice how the market found resistance exactly inside of this range. You might be wondering, why is specifically this RE imbalance so important? Why are we paying attention to that? When we pay attention to the daily chart, what you can see is that the market accidentally moved the December low. That's the one thing when it comes to these reviews, when I do them in raw format. Sometimes I'm making an error like that, where I accidentally move a drawing to or something like that. But you all seem to really enjoy these raw reviews because it's more like personal, so to say, than whenever I create a slideshow. And that is why I do them this way. But what you can see is that we formed this daily BC on the door right here, and the market expanded higher. What I outlined to you was that the reaction to this daily BC would be very telling for the month of March. Notice that when we zoom into the RE chart, keep in mind that blue shaded box, at the lower end of that daily BC, this RE imbalance formed, and therefore the reaction to that RE imbalance would tell the story moving forward. When we then open up on Tuesday, what you can see is that the market beautifully expanded towards the downside, and notice that this CB formed. We saw the market retrace into that CB multiple times, and this is where shorting opportunities presented itself for the dollar. Notice that the market kept on expanding lower, and this was a beautiful sell program, where I can see that there were beautiful expansions lower, followed by retracements higher, followed by expansions lower, followed by retracements higher, etc. Now that the dollar has stopped right in advance of that November low, I will be monitoring the reaction on the RE chart relative to that daily BC, which I've annotated with this blue shaded box. If the market would find support inside of this daily BC and we would begin to see the signs of a buy program unfolding, then we could see the dollar retrace into that December low price level, which is right here. Because when you pay attention to the daily chart, you can see that this is that December low. So when we go into the RE chart, once again, you can see that we also displaced through that low with this CB. Now, whenever a market is very bearish, you never try to capture a bottom. So therefore, I wouldn't really look for any long opportunities on the door to buy it into this low right here. unless it becomes so obvious that it's actually going to deliver. But for now, I'm still leaning lower and I'm still bearish, meaning the reaction to this bullish headed box of the DBC will tell the story moving forward. While you pay attention to Euro then, what I want you to see is that Euro also expanded towards the upside heavily from the moment that we opened up this week. I outlined to you that I would be monitoring the reaction to this daily CB on Euro, but what you can see is that when we open up the new week, the market immediately expanded straight through that imbalance. Notice that when we closed above this imbalance, the next candle opened up, dropped lower, and we then saw the market eventually expand towards the upside even more. Notice that the market expanded above the January high, and this was what I was waiting for a rather long time as outlined, because both Euro and SGU were moving significantly out of tandem, and the dollar and Euro were also moving out of tandem. What we were waiting for was whether or not this current correlation relative to the January high would remain intact or not. If it would remain intact and we would begin to see the signs of a sell program taking place, then we would be bearish on Euro. However, what you can see is that Euro finally caught up to both the dollar SGU, and then we saw the market expand towards the upside heavily for the remainder of the week. Notice that the market expanded into the price range of this day CB right here, and therefore the reaction to this day CB will tell the story moving forward. If Euro would displace above this day CB, then we can anticipate that day CB to function as support on price. Then anticipate that the market is going to draw towards buy-side liquidity resting above this high and maybe even higher, because more buy-side liquidity was engineered throughout this run lower. Now, when it comes to this whole run higher, what I want you to note is that because this expansion higher was so aggressive and because we reached the price range of this day CB right here, which formed right in advance of that November high, which is here, the reaction to this day CB will tell the story moving forward. I would not be surprised if we're going to see a retracement originate from this day CB, but again, whenever a market is so bullish and you see such big green candles, it's not really a scenario you would like to speculate on. If you do decide to speculate on a scenario like that, where you would see lower time frame sell programs taking place, please be mindful of the fact that those sell programs should be treated with the idea of, oh, we're not going to be in this position for a long time. When we pay attention to GU then, what you can see is that GU expanded towards the upside as well from the weekly open, and we saw the market trade above the February high. Notice that the next candle opened up, dropped lower into the February high subclose candle, and we then saw the market expand higher. Notice that the market took out buy-side liquidity, which was engineered inside of this day CB right here, and we even saw the market close above it right here. Now, as long as GU does not displace below this day CB right here, I'm anticipating that this day CB is going to function as support on price to continue repricing higher. If we would see GU displace below this day CB, utilized as resistance on price again, then that would be a bearish scenario. But for now, this market is overly bullish, and therefore I anticipate that we're going to see further repricing higher taking place. Buy-side liquidity has been engineered above these highs in the form of trendline liquidity, and therefore, if we are going to see a weekly open low taking place, the reaction to this daily beast right here will be very telling moving forward. Notice that when you pay attention to intermarket relationship, in my opinion, GU is a way more bullish market right now, as it has been basically for the past few months. And the reason why is because what you can see is that GU is clearly expanding towards the upside, retracing lower, expanding higher. However, notice that this is still filled with high resistance here and there, followed by expansions higher out of the sudden. When you pay attention to Euro then, what you can see is that Euro was just grinding towards the upside in this very slow manner. It's typical for the current environment because honestly, when you look around what's happening in the world, there are a lot of things going on which are like big events, and that is what you're seeing within the delivery of price as well, where you can see and feel the tension which is present, and therefore you need to act accordingly and don't try to overstay your welcome. And with that being said, I want to end today's review. I hope that my game plans for the upcoming week are clear to you, and I want to wish you good luck the upcoming week when it comes to looking at the markets. As outlined prior, the new pricing structure for the S&P detector will be announced soon, and we hope to be able to provide the majority of the students on my mentorship the ability to use the indicator the upcoming month for free to try it out and see whether or not they like it. Good luck the upcoming week, and I look forward to speaking to you soon again. Be safe.